Wall Street took another major hit on Friday as escalating trade tensions triggered a deeper sell-off. The Dow dropped 2,231 points, or 5.5%, bringing its two-day loss to 3,700 points. The S&P 500 fell 6%, and the Nasdaq dropped 5.8%, officially entering bear market territory, dropping more than 23% from its December high. What made Friday worse than Thursday? It was China's move. In retaliation to President Trump's Liberation Day tariffs, China imposed a sweeping 34% tariff on all U.S. imports. This sudden escalation sparked fears of a global trade war and sent investors running from risk. Market sentiment shifted sharply from caution to panic. JPMorgan raised its global recession odds to 60%, which only added fuel to the fire. Tech stocks were hammered. Apple fell 7.3%, Nvidia lost 7.4%, and Amazon dropped 4.2%. The Nasdaq was hit hard as tech's exposure to Chinese supply chains became a major concern. Safe haven demand surged. The 10-year Treasury yield fell below 4% for the first time since October. Oil prices collapsed 7% to $62 a barrel. And the VIX, Wall Street's fear gauge, spiked to 45, its highest level in nearly 5 years. But here's where things get interesting. Despite all this panic, there's historical reason to believe the market might catch its breath next week. Since 1975, the Nasdaq has posted a weekly drop of 10% or more just 8 times, not counting this week. In 5 of those cases, the index rebounded the following week, with gains as high as 9.7%. 2 of them with less than 1.6% loss. Only once, during the 2008 crisis, did it lose more than 15% the following week. That gives investors an 88% chance of seeing either a small loss or a decent bounce. Of course, this doesn't mean we've hit bottom. Volatility could remain high, and intra-week swings can be huge, just like in 1987, when a market dipped 12% during the week, despite only closing down 1.6%. But history suggests a potential pause or rebound is possible in the coming days. That's all for today. If you found this helpful, please like, share, subscribe, and comment below. Thanks for watching. See you next one.